Hey everybody, and welcome back to the channel. In a recent video, I reviewed my 2023 dividend buys. A few of the buys were closed-end funds, so I decided to do this video to show how to invest in closed-end funds. Many of us are familiar with investing in individual dividend growth companies or exchange-traded funds, but there is another investment type that may be interesting and useful on our dividend investing journey that you may not have considered, and those are closed-end funds, or better known as CEFs. In this video, I will discuss what closed-end funds are, the benefits of closed-end funds, how they work, some common terminologies, what to look for when investing in closed-end funds, 2 methods on how to invest in them, some popular closed-end funds to begin your research on, and resources to use to research closed-end funds. So what are closed-end funds? Well, closed-end funds, or CEFs, is a type of investment company. The company issues a fixed number of shares, hence the name closed-end, and uses the investment dollars to invest in different types of investment objectives, depending on the fund's charter. These investments may be stocks, bonds, or other securities, as well as sometimes private companies. Closed-end funds differ from ETFs in that an ETF is open-ended, meaning more shares of the ETF are issued as new investment dollars are added to the fund. Closed-end funds have been in existence since 1893, many decades before mutual funds were established, and nearly a century before ETFs were mainstream. So what are some of the benefits of closed-end funds? First, they're professionally managed, so you have active management reviewing the investments to make the best decisions for the fund's objectives. They generally offer higher distributions than ETFs or individual companies. Because of the closed structure, they do have access to investments that an ETF or an individual company may not have. They are traded on the stock market, so they do offer liquidity to the investors to buy and sell as needed. They do have access to private and less liquid investments that a regular ETF or individual company may not have access. They are also allowed to utilize leverage, which means borrowing extra money to make more investments. And because of the way they trade on the stock market, you can buy them at a discount to the underlying value of the assets they hold. So let's talk about how closed-end funds actually work. So closed-end funds are traded on exchanges, just like stocks and ETFs. Since the closed-end fund has a fixed number of shares, the investment management company cannot accept new money after the initial setup. Any shares that you buy and sell are traded among investors, not created by the management company like what happens in an ETF. The company will use the funds received from the initial funding to buy investments. Closed-end funds can also borrow money to increase the amount of money available for investment. It is not uncommon to have a 25% leverage in a closed-end fund, meaning they are borrowing 25% of the initial asset amount to increase the investments it can make. Closed-end funds are actively managed and generally have a higher expense ratio than ETFs, but also can give access to less liquid investments like private companies than ETF could invest in. Many closed-end funds also utilize an option strategy, including covered calls and cash secured puts, to enhance the income generated and enhance the returns as well. So let's talk about some terminology you might come across in your research of closed-end funds. The first one is NAV, also known as net asset value. It's the value of all the fund's assets minus the liabilities divided by the number of shares. This shows the value of the investments inside of the fund. Premium and discount. These are the amount under, in the case of a discount, or over, in the case of a premium, that the shares are trading for compared to the underlying assets net asset value. As we mentioned earlier, leverage is the use of additional capital that is raised by a fund through a debt issuance. And the expense ratio are the annual fees and expenses that the management company charges to run the fund. It is expressed as a percentage of assets, and examples include 0.75%, 1.1%, and so on. So what do you need to look for when you're investing in closed-end funds? Well, as with any investment, you need to understand what you're investing in. Some criteria to research include understanding the investment objectives of the fund. So what are they trying to accomplish? Are they focused on total return, current income, or something else? What's the portfolio? So what is the fund actually investing in? There are many different asset classes and sectors a closed-end fund can focus on, so you need to know what their goal is. How is the distribution safety? Is the payout too high? Has the distribution been cut before? You also want to look at the total return performance results. If the payout is high, but the fund loses value, it's not going to be a long-term investment. And then look at the premium and discount. So based on market conditions, the fund can trade for more or less than the net asset value of the underlying investments are worth. Generally speaking, buying a fund at a discount meaning you are getting a better value. Expenses. Many closed-end funds charge 1% or more in annual expenses. These fees come directly out of the annual returns, so make sure you're aware and comfortable with the fees. And lastly, liquidity. Are the shares of the fund bought and sold regularly? Can you sell if you need to without being required to sell at a deep discount because there are not many buyers? Now let's talk about some methods of investing in closed-end funds. There are two general ways you can invest. The first one is by dollar cost averaging into the positions over time. So with that, you buy a set dollar amount on a weekly or monthly or yearly basis at whatever the prices are currently offered in the market. You're not worried about buying at a discount or a premium because you plan on holding these long-term and collecting the distributions. Sometimes you'll get a good price and sometimes you'll get a not so great price, but in the end, it's all going to average out. The second method is to trade in and out of closed-end funds based on their discount or premium to net asset value. So generally speaking, you want to buy when it's trading at a discount and potentially sell when it's trading at a premium. A lot of investors rotate among closed-end funds depending on the valuation. So here's two examples of closed-end funds that are trading at a discount as well as trading at a premium to their historical net asset value. So the first one is the BlackRock Health Sciences CEF, and right now it's at a discount of 5.17%, meaning you can buy the shares on the market for about 5% less than the value of the underlying holdings. This may or may not be a good price, but when you look at the historical net asset value discount, BlackRock Health Sciences CEF actually normally trades at a 2% premium. So this might be a good time to buy this particular fund. Alternatively, the Liberty All-Star Equity Closed-End Fund has a recent premium of 4.49%, so you're paying more than the underlying assets that the fund holds, but historically it's been at a negative 0.66% discount. So you usually are able to buy it at a discount. So this may not be a great time to buy the Liberty All-Star Equity Closed-End Fund. But you can view these and other funds on multiple websites, including the CEFchannel.com is where I pulled this data. But you can use this information to determine when is a good time to buy or sell certain closed-end funds. Okay, so some popular closed-end funds that you might want to look into. Now, these are not recommendations to buy, but here are some of the most popular and best performing closed-end funds recently. What you see on the screen is the 10-year performance of the top 20 closed-end funds. On the right-hand column of each one, it shows the 10-year compound annual growth rate, meaning this is the average return of this fund over time. So as you see, there's been some significant long-term winners here. The ones in orangish yellow I own personally, including STK, which is the Columbia Seligman Premium Tech Growth Closed-End Fund, QQQX, which is the Nuveen NASDAQ 100 Dynamic Overwrite Fund. I also own BME, BlackRock Health Sciences Trust, and ASG, the Liberty All-Star Growth Fund. In addition to the ones highlighted here, I also own BDJ, which is the BlackRock Enhanced Dividend Equity CEF, BMEZ, which is the BlackRock Health Sciences Trust 2, BST, BlackRock Science Technology Trust, BSTZ, the BlackRock Science Technology Trust 2, and UTG, which is the Reeves Utility Income Fund. Here are some resources that you can utilize when beginning your research for closed-end funds. You can also view all the closed-end fund details on the fund's websites. Each closed-end fund administrator has the data regarding their funds on their company website. Others are listed here. One of my favorite companies and a huge distributor of closed-end funds is BlackRock. So they have an educational resource page, which is listed down the bottom, that I highly recommend utilizing when you're researching your closed-end funds to begin with. Hopefully this gave you an understanding of what closed-end funds are and how to invest in them. Closed-end funds have been a great addition to my income portfolio. Make sure you do your own research and understand the pros and cons, as well as the risk and reward of closed-end fund investing. Of course, past performance is no guarantee of future results. All the funds listed here are not recommendations, but for informational purposes only. Thank you again for watching. Really appreciate your time. Please subscribe if you haven't, and please click the like button if you liked what you heard today. And please share with your friends. It really does help. You can also view our website at dividendstockpile.com or reach out on social media, on Twitter, and on Threads. Thanks again, and have a great day.